On today's show, Disability Insurance Update for February 2014, Part 4 of this week's News You Can Use with nationally recognized disability insurance expert, Tim Kakazi. Hi everyone, I'm Steve Savant, syndicated financial columnist and contributing author to Backroom Technician. Let's get down to business. Well, welcome to the show, Tim.
Thank you, Steve. Pleasure to be here.
Well, I have to say, when we're talking about disability, I would not have thought, this is just Steve, and I think most of my audience is the same way, we never think of Lloyd's of London and disability. Now,
Right.
I know I've mentioned this before, but talk a little bit about our vendor, how we play, because you have a major case that we could have not placed in a traditional DI carrier.
Okay.
Why did we go to Lloyd's of London?
Yeah, we've had great success with our Lloyd's of London cover holder, who's Peterson International out of California, and we had a tremendous year with them last year in 2013. And really what they offer are some real unique situations, whether that's above the traditional carriers in terms of the benefit amounts that they'll offer, the age that traditional carriers will offer. Normally, the traditional carriers will cut off at 59 or age 60. The Lloyd's product will go well beyond that.
Well, I'm just curious, how well beyond it?
Yeah,
Just
they'll
out of
actually go up
curiosity.
to, we've had some cases go to age 70,
Wow.
got issued coverage for age 70.
For
but-
DI.
That's right. But
Wow.
that case you're talking about specifically, one of the great things that we have with that Lloyd's product is we were able to get a guaranteed standard issue, which means no underwriting whatsoever. So this was on a 7-person neurologist group. They were looking for business overhead expense. The overhead expense numbers were above the traditional carrier numbers, okay?
So there's most traditional carriers, there's going to be a limitation.
Sure. Based upon the plan design of a business overhead expense policy, you might have $30,000, $40,000, or $50,000 a month of benefit.
As your cap.
As your cap. So there was two things associated with this case. One was the benefit amounts were above the traditional carrier offerings, and two was because of the Lloyd's product and the availability of their guaranteed standard issue, it was a 7-person group. And because all 7 people are going to buy the coverage, we were able to do that with no underwriting whatsoever. And you really couldn't have done that with a traditional carrier. So it's phenomenal.
How much guaranteed standard issue do you see out on the market in DI and group like this?
Yeah, it's interesting because we're hoping and looking at more and more cases on a weekly basis, okay? Another situation that we ran into with a traditional carrier was a 7-person executive group, okay? So you had high-end executives making over $200,000. Their group LTD program was capped out at $5,000, so they were underinsured tremendously. And because we ended up with all 7 or 8 of them buying the coverage, we were able to get $5,000 of, again, guaranteed standard issue, no underwriting, and that was with a traditional carrier.
Now, I'm surprised because when I saw the premium, $42,000 for the 7-man GSI group for business overhead expense, $42,000. I think people don't think in those terms for DI.
Yeah.
I mean, especially on a group case.
Yeah, the premium is quite attractive, that's for sure. And there's no question about that everybody was a winner in that situation. First of all, when you don't have any underwriting associated with a case whatsoever, you can have health issues that don't come into play. So you're not declining anybody, you're not rating anybody, there's no exclusions. So it makes the ease of application process very simple too. So the premium is very nice, but the actual processing of the case becomes very streamlined.
Well, what I like about this is a little off the beating path, and this is something, if you're not really into disability as part of your practice or core competency, you remember we have people in-house that actually know this ice cold. Tim, you're one of our leaders of that. You're nationally recognized as a DI expert. I want to shift gears. We talked about this is back, in September, I think it was. We talked about Metropolitan came into the business. I was kind of like, oh, well, they're kind of life insurance. They're morbidity, they're a mortality company. Yep. But they brought on a whole new line of product. How's that been going since they've introduced this? They're really starting to get a piece of the pie here.
Yeah, they've always had a good showing in the disability marketplace, but as you said, they introduced back in September an income guard product. It's their first product offering that they redesigned in 10 years, and that product has gotten a lot of traction in the marketplace. They reduced ages for younger people below the age of 40. They reduced the premiums for those people, and the product itself is designed with new riders that other carriers don't have in the marketplace.
Can you talk about a couple of those anomalies?
Yeah, like as an example, when you have your health insurance benefits, if you go out on disability, you may end up losing your health insurance, so you have to go on COBRA. And anybody who's been in that situation before knows that COBRA can be very expensive.
Right.
Okay, so MetLife has a rider where they'll pay for your COBRA premiums if you're disabled, if you add that rider to the policy.
Does anybody else have that kind of a rider?
No, in the marketplace again. So they have a couple other riders that really no other carriers have. That COBRA rider is one of those riders that really they offer it for unique, as a unique situation.
Well, I know there have been players in DI for a long time, but they put over $40 million in target premium on the board.
Yeah, again, that new product that they have and the way that they've increased and done a good job with their servicing of the agents from our side of things and working with us as a brokerage general agent has been a great experience over the last 18 months.
I've noticed that there are a lot of carriers that still bundle products, a lot of side venue contractual issues, and sometimes that prices them out of the market. That's why I've noticed that you've been using Principal a lot, of a traditional carrier that kind of lets you do a little like a potpourri or something.
Yeah, with Principal, it's a great opportunity for you to pick and choose what you want to put into a product, to design that product so that it's applicable for that specific client.
We'll be right back, right after the break. Back in the day, life insurance professionals were called field underwriters. Then, carriers trained their field force in the basics of life insurance underwriting. Today, the insurance industry doesn't educate the agent population as they once did. But now you can have the Informed Risk Guide at your fingertips so you can illustrate a reasonable rate class for your life insurance prospects. Just request your copy of the Informed Risk Guide at downtobusiness.ashbrokerage.com. It's free from Ash Brokerage, the practice enhancement company. Hey Tim, before we get into the main body of this second segment, touch a little bit more on Principal because I want to give them their due.
Yeah, in regards to that, one of the things you mentioned was bundled and unbundled. Well, again, Principal does a great job. What you have is the opportunity to add in the appropriate riders for a presentation or for the illustration itself. So whether you want to add in the true own occupation, the COLA, the residual with recovery, so you have the ability to build that product appropriate to the client, where some other carriers include a lot of that into their initial presentation and illustration.
So Principal is very much a la carte.
Yep.
And other carriers are putting it in the bundling, and that brings the cost up. And maybe that's what people say. That's why I like this individualized, customized way of going.
Yeah, and the bundling also, it helps if you need that high-end product, because when you bundle your product and you're a carrier that puts it all together, if the majority of your clients need all of that, then you've actually decreased the price by bundling that, okay? But in a middle America marketplace where you're not doing all the high-end provisions in every contract, the opportunity to pick and choose those is very helpful.
Let's shift gears now to our main body of what we want to talk about in this segment. We're talking about business buyout. Now, every time I think of business buyout, and especially a lot of our planners and advisors are watching the show, they're like, I understand business buy-sell agreements, whether it's business succession, buy-sell, cross-purchase, stock redemption for life insurance. I have hardly ever see disability in the same succession planning docs in my last 30 years.
Yeah.
Why is this omitted?
It is an overlooked type of situation when you get into a business situation. So you really, as an agent, want to pay attention to, if you're doing a life insurance buy-sell with your clients, and you address the need for life insurance. The one thing that I always mention is there's a lot of bells and whistles that you can add to a life insurance policy that puts a lot of sizzle in that contract. You really don't have that sizzle with a disability buy-sell situation, but what you have is a situation that's more likely to occur during the client's working years, okay? You have the ability for a stroke, cancer, heart attack. Those are going to happen more likely in the client's working years, where the disability buy-sell is going to come into play. Whereas on the life insurance side of things, you can do a lot of the sizzle, but normally those policies don't have any applicable value because the clients aren't passing away during their working years. They're being disabled.
Yeah, I think a lot of people, we're starting to move towards this new mantra of buying term and spending the difference on DI because the Vegas odds are high on disability. And if you're with another owner and that your partner becomes disabled, I'm saddled with all the workload now and they're still participating in the revenue.
Absolutely.
I have to have a way to offset that.
Right.
Now, when we're talking about this, I always think of DI as I'm a mortality guy, so I have to forgive my ignorance. I always think about, hey, why do we have to wait a year here? I'm used to 30-day, 60-day, 90-day elimination periods. Why is it a year?
Yeah, on the individual side of things, we get a lot of inquiries for people actually looking for disability benefits shorter than the 30 days, actually, okay? But on the disability buy-sell side of things, what you want to have is a waiting period that allows that owner to recover from their disability. So if you have a stroke, a heart attack, a cancer situation, a year, as you mentioned, is actually the minimum for a lot of the carriers. They want you to be able to try to recover. So in the meantime, hopefully you have individual disability benefits that's paying you as a disabled person. If you're a business owner, hopefully you have business overhead expense that's helping your partner with those expenses of the business. But after a year now, if you're still unable to perform your duties, or 18 months, or 24 months, then it's time to seriously consider getting out of the business. And with that 1 year wait, or 18 months, or 2 year wait, it allows you to have recovery time to come back into the business.
I'm looking at some of this offset because if we have some docs on this, and I know we all have really good information. I'm looking at this one thing about the basic idea of recovering. Let's say I recover and I'm entering back in. Is there any, I've heard this term residual benefit at all for buyout, or no, that's exclusive to individual DI?
Yeah, normally you don't really see that on the buy-sell situation. Normally once the buy-sell kicks in, then that's a situation where it's going to continue. So we're going to continue to buy you out. So even if you recover and you're getting back to work, then you're still getting bought out of that situation. Because if not, if we stop the buyout, then you have to buy yourself back into the business.
So really, once we engage the trigger, we are actually selling the business based on the disability. So if there's going to be any kind of coming back into there, this is going to be like joining the firm again or investing in the firm again.
That's right.
Talk to me a little bit. Can you convert to individual coverage off this?
On the buy-sell side of things, some of the carriers do have a conversion, but that's not a feature that's prominent in many of the disability carriers.
When I'm thinking about disability and I'm thinking about buyout in this regard, are we moving more and more to these buy-sell DI? Do you see this as now an emerging market?
I see this as an overlooked market. I mean, there is a tremendous opportunity out there for the buy-sell product, but what agents are focusing on, as you said, is the life insurance side of things. And when you see the documents, and we have different carriers that will actually explore the documents that your client has free of charge, they'll look at the documents, they'll value the business for you, and they'll make sure that the wording in those documents addresses the disability needs that your clients might have, along with the life insurance. So it's an emerging marketplace, but it's an overlooked marketplace, that's for sure.
Well, that's our show for today. Remember, before moving forward with any of the ideas you hear on our show, always consult your tax advisor, legal counsel, or your broker-dealer compliance officer. And don't forget, you can view all our past episodes at downtobusiness.ashbrokerage.com. And remember, you could be wiser as an Ash Brokerage advisor. I'm Steve Savant. See you.